Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Let's get to one of our most read stories that's definitely on our radar today. And this is the Wall Street voice, Tim, everyone listens to, who's talking about AI and steam engines. And that's where we're going to go now.
Yeah, that voice, JPMorgan Chief Executive Officer Jamie Dimon, out with his annual shareholder letter, always a must read, of course, for the investment community. And in it, Dimon devoted a chunk to the importance of artificial intelligence, saying it may be the biggest issue that his bank is grappling with. Let's get into it with Sally Bakewell, Bloomberg News America's finance team leader. She joins us here into the studio. Sally, as always, the annual letter, chock full of stuff to talk about, but AI seems to really be getting the attention right now. I'm wondering how you see Jamie Dimon presenting this as a challenge that his bank is dealing with rather than an opportunity.
Yeah, well, I mean, first of all, we watch Jamie Dimon not just because he's the CEO of the biggest American bank, but because he, perhaps more than any of his big banking peers, kind of weighs in a more forceful and powerful way. And we really listen when he does. And that's exactly what he did in this letter and with AI, which, you know, he did take the moment to outline these sort of bad actors that, you know, you have to be very careful of and on your guard toward. But he said that the bank has been, you know, over the past 10 years, doubling down on the technology. It has amassed thousands of data science experts and AI experts. It's beginning to explore generative AI, and it's continuing to invest. So I think the opportunity, probably surpasses the level of the challenge it is for them to make sure that they are using the technology in the right way.
Remind us, because, it was Tom Keene who was talking on surveillance, and he was like, why doesn't every CEO kind of write this kind of a letter and stuff? And I think it was Sonali who answered, Sonali Basak, who said, not everybody has, first of all, has seen so many different market cycles and difficult cycles and has come out shining, right? And has done really well, has managed them. And this is why when Jamie Dimon, Sally, talks about something, we kind of care.
That's right. I mean, he's the longest serving bank CEO of the big US banks, and he's the only one that is still there since the financial crisis.
Remarkable, right?
Indeed. And he went through the financial crisis, and he has this very expansive perspective. And he has, the data of JPMorgan at his fingertips. The amount of sort of economic knowledge and the breadth of economic knowledge he has is obviously worth listening to.
Just to follow on AI, I mean, AI not new to Wall Street. We know that, but it does sound like Jamie Dimon is spending even more attention or efforts, money, focus on the bank when it comes to artificial intelligence, and especially when it comes to generative AI.
Yeah, I think, he today really outlined the potential of this technology to transform essentially the world. It's not just about his business, although he said that it could completely transform some of their business lines, but it will have a huge ramifications for society at large. And that's why he introduced, the steam engine, the printing press, the internet. He's likening it.
Things that changed our world forever, right?
Exactly. He's likening it. He's putting it in that bucket.
Yeah, I guess one thing that I think about when we hear that is where the opportunities are. I mean, certainly we talk a lot about NVIDIA and the opportunities when it comes to tech companies, but if it really does touch every company, I mean, where does someone like Jamie Dimon see the opportunities here?
Well, I mean, he said today that he could see it having the potential to augment virtually every job. Every job. Yeah. And, it could make people more. He has also said, if you recall, that, it could cut down the working day for a lot of people to about 3.5 days. AI could help in that regard. I mean, I think for banks, the opportunities are sort of near limitless. There's their trading operations, their trading algorithms, and sort of from the hiring perspective and the talent perspective, these banks are increasingly filing patents for AI, to use AI in these sort of operations. And it's just a general huge efficiency push, and they are so competitive. Expenses matter. Anything they can do to bring those things down, and AI is one way of doing it.
We talked about the 4-day work week last week.
I was just thinking about that.
What about the 3.5 day
exactly.
work week? How does that sound to you?
Any takers for 2-day work week? No, it's just kind of interesting from the financial community. That was
Steve Cohen.
Steve Cohen, forgive me. Who said not his workers, anybody who's managing a portfolio, market's open, you got to be there. But it is interesting to hear from these financial types that were very much, especially post-pandemic, after a little bit of while, are like, we want you back in the office. So it's interesting to hear him talk about, and I understand he's talking about AI across a lot of different industries, how it could impact the world. What was the most surprising thing in this letter?
I mean,
he covers a lot of stuff always.
He did. I think what was surprising was he has come out swinging against a number of things. Regulation, the Basel Endgame proposals. He's been a long time outspoken critic. He went a little deeper on that. He's said for a while that these regulations will harm Americans, that they're arbitrary, that they're rife with duplication. All of these things emerged in the letter again, but he actually this time said, bank management boards and bank teams, our relationships with regulators are actually deteriorating and are not that good, which was quite a surprising, nuanced comment to make. And he also sort of implied that regulators don't necessarily know exactly what they're doing, because he said a lot of them have not been practitioners in the industry. So it's just one level above. And he also took aim at shareholder proxy advisory firms. He has sort of long lambasted investors who rely solely on those firms, like
called that
ISS.
two major, right?
Exactly, two major ones in the US, ISS and Glass Lewis. He says investors should do their own homework. They shouldn't rely on these firms for recommendations for how they should vote their stock on contentious issues like executive compensation, or whether a merger should go through, or a climate policy. He says, do your own homework, and don't. And how do you know that what they're providing is accurate? He actually went out after the firms and said, that they have too much sway and undue influence. Were his words.
Interesting.
Big picture, at least in the near term, he doesn't seem as optimistic as some others about the U.S. economy and the idea of a soft landing being all but guaranteed.
Yes, that's right. Market expectations that soft landing is sort of putting it at 70 to 80%. He says the odds would be much lower than that. He continued to sort of couch that sort of assessment of the economy where consumers remain resilient and they're still spending, but there is this huge overhang of sort of inflationary pressures, of quantitative tightening, and of course this very fractious geopolitical background with wars in Ukraine and the Middle East, and all of these things make it could sort of add up to a very unprecedented situation which we can't predict.
Any weather references this time around?
Not that I recall.
Forgot to search for them.
I will say, to that point, Carol, he did talk about interest rates ranging from 2% all the way up to 8%. So that could be looked at as some sort of weather prediction.
That's true, but they're ready for any scenario, is his point, right?
That's what he said.
That they're ready to do it. Anything, well, I wonder if that's kind of a setup, if I think about on Friday when we get the jobs report. That's a great way to kind of be like, hey guys, we're on it. Right. Ahead of earnings.
Right. Yeah, it's always interesting that this comes out just before earnings and they report on Friday. And I think, the big thing that we are all looking at in earnings will be how banks alter their guidance for net interest income, which is essentially their biggest source of revenue as banks, because the trajectory of interest rates will have a huge impact on that.
Sally Bakewell, of course. Sally is America's finance team leader at Bloomberg News here in studio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, Tim, so what happens when our Bloomberg Intelligence analysts sort through the barrel to find the good apples across sectors and regions, a group of companies that come from a larger group of high-confidence focus ideas that BI identifies on an ongoing basis? Do you know what happens?
I know what happens because, well, I prepared for the segment.
You did.
But what they do is they come up with, at least this time around, the 10 companies to watch in the second quarter. This story featured in the new issue of Businessweek magazine. It's available on newsstands, on the Bloomberg terminal, and at bloomberg.com/business.
All right, so let's get more on those 10 companies. Back with us, Bloomberg Intelligence Senior European Strategist and Director of Research Content, Tim Craighead. He is joining us from London. Tim, we always love going through these lists with you. So take it away. We kind of set it up. Is there anything we need? Anything else we need to know is how you guys curated this list?
Yeah, thanks for having me on. And I would say that one of the things that happens when we come up and do these sort of things is that the Business Week folks come up with some really cool graphics in the magazine, and in particular, if you look at it on the online version. But suffice to say, from Bloomberg Intelligence's perspective, this list of 10, you referred to it, is part of a broader list of what we call focus ideas. And the focus ideas are companies where we've got a very strong fundamental view, a high conviction view, that we think is differentiated from the market and what the market seems to be discounting as it relates to the stocks and whatnot. And importantly, there's a catalyst ahead that we think can change the market's point of view, assuming we're correct. And importantly, with these 10 companies that we focused on here, they all have really key catalysts coming up for the second quarter. And that's why we've picked these. There's 2 of them that are cautious views. There's 8 of them that are positive views. They span sectors, they span regions. And yeah, that's the setup.
Okay, so let's talk about some of those sectors. I want to start with tech and innovation because a couple, and these are not, I would argue that not every one of these companies on here is a household name. And certainly some of them are on the smaller side. So talk about what you found in tech and innovation and what the team found there.
Yeah, absolutely. So, there's an awful lot going on in the world of technology these days about AI. You can't not talk about it. And there's 2 companies here that we've got on the list that are related to artificial intelligence. One is Salesforce, which is the world's largest infrastructure software company. And notwithstanding how big this company is, it still actually may not be a household name, given the nature of the beast. Importantly, any company that is looking at all the information they get from their customers probably relies on Salesforce and their software programs. And they're going through 2 things right now. One is a big tech infrastructure software spending cycle that we think is gaining momentum. And then secondly, it's the need for information to feed AI programs and initiatives. And Salesforce is right smack in the middle of all of this. The other one is a company called Tencent. And if you're in China, you definitely know about Tencent. It has a lot of things going on within the world of online gaming. Importantly, from our perspective, they've gotten into short videos, and AI is enhancing the way that they're generating revenue from advertising. Both of those are feeding Tencent's business that we think is underappreciated by the market. The last one I would mention is a company not in the world of classic tech, but technology in the world of medicine, a company called Penumbra.
That's the one I was thinking of when I say not a household name.
Exactly. So these guys make computer-assisted vacuum technology products. And you say, what is that? Think blood clots. And usually the way you treat blood clots is with anticoagulant drugs. And they've got all sorts of other ramifications. Penumbra's computer-assisted vacuum technology can go in and actually suck blood clots out of arteries and veins, even really small ones, and you don't have to take the drugs. It's great. And again, all 3 of these we think could generate better than anticipated revenue, margins, earnings.
And I just want to mention, when you talked about Salesforce, we actually spoke with Alice Steinglass, Executive VP, General Manager over at Salesforce, and they talked about the role of Gen AI and the role of data and making it ready for their customers. So she kind of got into some of the growth initiatives that you referred to. Another theme we want to touch on, and that has to do with actually 2 Chinese companies. Walk us through that.
Yeah, so China is certainly having its challenges. Mm-hmm. I think you all are clearly very well aware of what's going on in the world of Chinese property. It's definitely under pressure on all sorts of different fronts. And there's also other issues. The stock market has fallen and whatnot. There's regulatory measures that are being put in place to try to curtail some of these problems and change the course. Part of those are actually putting a damper on what's going on in the world of initial public offerings and secondary market offerings in the stock market. And CSC Financial is one of China's biggest brokerage firms. And we think that they are due to disappoint through the first half of the year because of this. Another one is a company called Chow Tai Fook. It's based in Hong Kong. It's the biggest Hong Kong-based China jeweler retail company. If you're in Hong Kong, you definitely know Chow Tai Fook. And it's interesting because not only is there a negative effect because of what's going on with property and consumer sentiment on jewelry purchases, but Hong Kongers specifically are going to find things cheaper on the mainland. They're going across the border. And all of this, we think, is driving a disappointing trend for Hong Kong retail sales, and Chow Tai Fook is a poster child for this. So both of those are concerns.
As you said, great illustrations by the Bloomberg Businessweek team. It's all about apples, and these apples are a little bit bruised. So kind of fun to see that go along. We got another sector.
Yeah, I want to talk construction here. Some interesting names from the Bloomberg Intelligence team talking about potential beneficiaries of a construction boom. What did you find, Tim?
Well, so Taylor Morrison is a home builder, and they're ones that focus on larger communities. They've got more and more growth coming from Arizona and Florida. And we think that there's an opportunity to see better margin improvement given the way that they're driving their business, pure and simple. Oshkosh is more on the bigger commercial side, and it's not only construction, but they also do other commercial vehicles like fire trucks or ambulances or the new postal service electric vehicle. So all sorts of projects there. But generally, there's concern that on that commercial side, that there's a down cycle actually that's developing. And we think Oshkosh is going to be able to actually surprise on the positive because they've got such a big backlog and some of these new initiatives that are playing through to the revenue stream.
All right, finally, a sector we love to talk about in travel. And you got two names in that. Walk us through those two. Accor is one of them?
Yes. So there's one that's absolutely classic travel, and the other I'm stretching things a little bit by suggesting travel.
I mean, the Michelin Guide was created for a reason. I think it's fair to say. It's just a little preview.
Like there you go.
We're helping you out there.
Yeah. So Accor is a hotel company. And I think a lot of the listeners here have probably stayed at one of their hotels. They go from the very high end to more modest economy brands. The thing that anybody who stayed in a hotel recently has probably found is how expensive it is. It's pretty shocking sometimes what the rates are that you have to pay. That's feeding Accor's revenue. There is a global travel cycle that we think is stronger and longer, and Accor is in the front of that, both from a Europe and an Asian travel base. Interesting, they are French. Their home is in France, and it's only a small part of their overall portfolio. But the Paris Olympics this summer are the catalyst we're looking for, because pretty soon we're going to start to see the early bookings that they release in terms of the Paris Olympics, and it should be quite robust. The other one,
20 seconds though. Yeah, go ahead.
Yes. Pirelli, it's a tire company. And yes, you have to travel if you get in your car and you spin those tires. They are moving their production bases to Mexico and Romania. It's cheaper, and they're curtailing the low end of their tires to high end. And so there's an upgrade cycle. We think both of those can create positive surprise.
This is not the F1 tire that we're talking about specifically.
It is the F1 Pirelli tire.
Okay,
yes.
good. Okay.
There you go.
Always love these lists. Names that we know, names that we don't, but definitely you give us the reasons to keep them on our radar. So appreciate it. Tim, thank you so much. Bloomberg Intelligence Senior European Strategist, Director of Research Content, our own Tim Craighead, joining us there from London.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, well, private equity payouts are in a slump, Carol. 5 major alternative asset managers, we're talking Blackstone, Apollo, Carlyle, Brookfield, Ares, delivered about $37 billion from cashing out private equity bets last year. That's according to Bloomberg calculations. It's a 49% drop since 2021. That, of course, was the year before the Fed began raising rates.
Indeed. The private equity industry is banking on the Fed cutting rates this year, which would spur buyers to tap debt to grease purchases and ultimately return money to limited partners. All of that, Tim, from a great piece back in February by our team here that covers private equity. So we've got a question. How are the leaders of small and mid-sized businesses thinking about private equity in this environment? It's a good question.
Don McCree is a vice chairman and head of commercial banking at Citizens Financial Group. It's the Providence, Rhode Island-based publicly traded bank. They've got 1,100 branches, total assets of around $222 billion. Don joins us from Boston. Don, how are you?
Very good. Good to be with you today.
Yeah, it's good to have you with us. Okay, so just talk to us a little. You guys did this survey, but before we get to the results of that, I do want to talk a little bit about the environment right now that you're seeing with the economy, private equity notwithstanding, just general economy, what you're seeing, what you're hearing from clients, and what you can tell our listeners and our viewers.
Sure thing. I think the economy feels quite strong to us across the board. I think the jobs numbers of a couple of days ago were testimony to that. We're hearing a lot of confidence within our small and mid-sized business customers, and I think it's a sharp contrast to what we were hearing just a year ago when people were quite concerned, quite nervous about a potential recession, still kind of adjusting their businesses from a supply chain standpoint and a labor standpoint. But the tone has really changed as we've rolled into 2024.
So better, bottom line.
Much better. Much better.
All right. So talk to us in terms of your perspective, what customers, whether it's in the small area, small size companies, mid-sized companies, medium-sized companies, what you are seeing in terms of what they need in this environment today, and what are their requests most often?
You know, it's interesting. They're beginning to reinvest in their businesses, and that was after a couple of years of real conservatism. So people not building plants, people kind of screwing down their inventory levels and really managing their working capital more tightly. We're seeing that change at the margin, not huge yet. We're seeing a lot of activity in the refinancing area. So that's both in the bank markets and in the public bond markets. So the first quarter of the year and into the second quarter has been incredibly active in terms of high yield markets and investment grade markets. And the syndicated loan markets have had almost a 70-80% content of refinancing. And what that's saying to us is, companies are looking at their maturities, seeing liquid and open markets and addressing those maturities aggressively as they look out over the next couple of years.
Why do you think that these small and medium-sized businesses are turning to private equity? Like, why is this the area that they want to turn to for potentially financing or for potentially to sell to? Like, what is attractive to that?
I think it's a couple issues. So we've got a very large M&A advisory business aimed at middle market companies. We have long-term relationships with those companies, know their companies quite well, and are selling anywhere from 10 to 20 of those companies every year. I'd say the vast majority is ending up with private equity, and we take advantage of a very strong private equity relationship business that we have here at Citizens. So there's a active M&A dialogue that's going on. Some of that is pent up from a long period of time where smaller companies weren't able to sell themselves because the markets weren't attractive. So a lot of these companies wanted to sell before COVID, some wanted to sell before the Great Recession. And now that liquidity is back, the company's underlying performance is improving, and the rate environment has kind of peaked from everything we can tell. There's beginning to be a lot more activity in the marketplace. The other thing that we've seen in a couple instances is private equity being, quite creative in terms of taking minority stakes or structuring equity investments into companies that may not want to sell themselves outright, but just may need some growth equity or another form of capital to help facilitate their business strategy.
How much is maybe the uptick too, or the interest, Don, at this point, because the terms are better than maybe they were 6 months ago or 12 months ago when it comes to private equity?
Terms are quite good. Like today where we saw the 10-year back up a little bit, what we're seeing is spread tightening going on in the marketplace. So while interest rates have stayed a little stubbornly high, we see credit spreads across the board come in as liquidity has been looking for a home. Other terms and conditions have stayed relatively flat. We're not seeing a lot of loosening of covenants or things of that nature, but it's really an attractive spread environment, which is offsetting a little bit of the stubbornness of term rates.
How much dry powder is there around for you to do deals? And I bring it up because the way, as Tim started the introduction here, is we talked about, Blackstone, Apollo, Carlyle, Brookfield, Ares Management delivering about $37 billion from cashing out private equity bets last year. These are according to Bloomberg calculations. A 49% drop since 2021, the year before the Fed began raising interest rates. That's a big drop in terms of the cash out. And I'm just curious about just kind of the environment, how much dry powder is kind of out there looking for deals to do. Maybe investors aren't so interested in this because the returns aren't there. So I kind of wanted to get your view on that, kind of the flip side of it.
Yeah, my sense is there's plenty of dry powder out there. It's over $2 trillion that's on the sidelines looking to move into the market. So you have to realize that a lot of these complexes have multiple funds. So some of their older funds may be invested, and they're a little challenged for realization because equity values have stayed stubborn. Although that's changed a lot since Powell's speech in the fall, and the rise in the public equity markets is spurring some exit activity on private equity. But there's still a lot of uninvested money in newer funds that is looking to be put to work. And you saw one big transaction announced today by Blackstone, I believe, in the real estate space.
Yeah, big one. Mm-hmm.
So what happens if the Fed doesn't cut rates this year, Don?
I think at the margin, if they cut rates, it'll be a little bit better, but I don't think it's going to really impact what we're seeing. And remember, we're talking about small and mid-sized businesses. Okay. So these are valuations of $100 million up to $1 billion. They're not the $10 billion global transaction. So they're a little easier to get done. They're a little easier to get financed. So the question will be, leverage levels will probably be slightly lower if interest rates stay high, but valuations will probably adjust also. And it feels to us that buyer and seller expectations are beginning to come together in a more aggressive way.
I am also curious, Don, for you guys at Citizens, I mean, how much is private equity and or private credit becoming kind of an important aspect and something you want to be able to offer to your customers?
We're not in either of the businesses. We look at the private equity and private credit complexes as both competitors and customers. We have very big relationships, and we often will underwrite and distribute some of our syndicated lending activity into the private credit funds. So they're buyers of some of the risks that we originate. We have great partnerships with a lot of them. We haven't set up a formal partnership the way some of our competitors have, but it's not really stopping us from engaging in interesting business. And on the private equity side, it's a huge part of our business. We've been active with the private equity firms for the last, since we went public about 9 years ago.
But on the private credit side, do you want to guys get more involved? I mean, it feels like it's been the only thing anybody in the financial industry wants to talk about pretty aggressively in the last couple of years.
We won't do it on our balance sheet, I don't believe, because we have no plans to. And it's largely because the leverage levels tend to be higher than we're comfortable with.
Got it.
So we'll do it in partnership with some of our good relationships there.
How does it compare to other periods of time where you've been doing this? I mean, we talk about a lot. The high interest rate environment right now is one that hasn't been seen, at least from the Fed side, in decades at this point. What has that effect been on the clients that you serve from a private equity perspective?
I think deal activity has been relatively slow over the last couple of years, as you rightly point out. Realizations have been slow, and there's been a value gap between buyers and sellers of companies. So that's been the primary problem. Is you have to have the buyers lower their expectations in terms of price, and the sellers might have to pay a little bit more than they think. But deals are beginning to form, and we've seen a real uptick in activity across the private equity clients that we have over the last, literally since the beginning of 2024.
Do you work with clients who would also consider going public, or are these companies not necessarily that profile?
No, we have an equity platform that we bought a few years ago. Mainly focused on tech and biotech and financial technology, but also other industries. We were on the Reddit IPO, for example, as a book manager. Mm-hmm. So we're beginning to see the public market activity tick up slightly. It's still easier to get a deal done in the private market from my standpoint right now.
That's what I was wondering, yeah.
I am interested too, though, in private equity in general, since you guys have seen so many different cycles or seen a fair amount of cycles. Don, in terms of the types of deals, is it industry specific, we talk a lot about AI. We're also, looking at the biotech area. There's been a lot of activity in terms of deal activity going on there. Is there any specific verticals or industries where you're seeing a lot of interest or looking to do some kind of deal on the private equity front?
Not AI, but certainly in data centers, we're seeing quite a bit, and we have a pretty big data center advisory business. We've seen a lot in healthcare, including biotech, and then just good old-fashioned manufacturing companies that are performing from a solid cash flow standpoint. We see a lot of activity there, and in the sector we're talking about, which is the medium-sized business, they tend to be family-owned businesses, and the driver really around activity is the next generation doesn't want to be involved in the company, so they're looking to realize from a trust and estate standpoint.
So like a liquidity event, right? And they just want to get out of it.
Yep.
And basically,
exactly.
Hey, how do you guys think about? It's interesting. We've talked a lot about the Jamie Dimon shareholder letter, and in it he covers a lot of big things like AI and also geopolitics. But I do think about something like the elections come November. Are you concerned about the outcome and how it might impact, especially when it comes to a private equity aspect, or even financially, or for banking, regulatory? Is there things that are top of mind for you?
I think, I'm a little more concerned about the volatility that could be in the markets before the election, depending on different statements or different positions that some of the candidates could take. Hard to predict what that's going to be, but I think history has said that the markets usually can kind of move on once the results of an election happen. And I think it's interesting that both of the candidates, it appears, are pretty well-known entities. So they both will have been prior presidents. So I think the market will be able to handicap pretty much what they're going to get, regardless of who the winner is going to be. I think we'll see what happens in terms of geopolitical stances if Mr. Trump becomes the president again, and probably the regulatory environment feels like it's a little bit more challenged under a Democratic president, the way it's been for the last couple of years as mergers and acquisitions have a little bit of a difficult time moving through the system.
Is that the general consensus that you hear when you speak to, does this come up with your clients? Is this something that you're talking about right now?
They're really not that worried about it. It's a long way away. I think they're much more focused on the core functioning of their businesses and making sure that they actually can perform and are prepared for whatever gets thrown at them. So there's not a lot of obsession among our clients around election outcome. There's not a lot of obsession around geopolitical events. Obviously, if something goes awry in the Mideast and oil prices spike, that'll affect some of the customers we deal with, but they're much more focused on the nuts and bolts of running their businesses right now.
All right. I'd be remiss if I didn't ask. Any obsession for you over the eclipse?
No, I was wondering if it was going to get dark in here in the middle of our conversation, but I think we're 15 minutes away. Got a nice sunny day in Boston.
Yeah, I see. I think it's over Cleveland right now. So we're just kind of keeping a watch on it. Listen, you do keep a watch on so much, and it really gives us a great snapshot for our listeners and viewers in terms of what's going on. So appreciate it. Don McCree joining us, Vice Chairman and Head of Commercial Banking over at Citizens Financial Group, joining us from Boston.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
It is Eclipse Day, you know that, and it's interesting. I'm looking outside our Bloomberg windows here. Lots of glass in our offices, and it's getting pretty dark out here. Reminds me of kind of an afternoon in the winter, so it's definitely coming our way. Tim Stenovec, I'm just going to say, he headed up, I believe, to another floor to kind of check it out as well. People throughout Texas, Arkansas, Illinois, and Ohio have already experienced it, and as I said, right about now, it is moving here in the New York area and headed to Buffalo, New York. If the weather's good, it will in particular experience a total solar eclipse, the moon completely obscuring the view of the sun up there in Buffalo. So a lot may happen. Julie Fine is Bloomberg News Texas Bureau Chief. She's been following it all day, joining us from Dallas, our Dallas Bureau. Julie, we have been following it, the live feed off of NASA. Dallas, tell us about what it looked like from your perspective earlier today.
I mean, it was almost pitch black here. It's interesting because it was a cloudy day and there were questions on how dark it would get. It got really, really dark. We actually went down to the park near our offices, and overall, the mayor guessed that there was estimated about 400,000 people came to the Dallas area. So it was definitely really packed down there. I would say it started to get dark within about 45 minutes before we hit totality. And then it really covered, and it was really dark for about 5 minutes. And then it was like light again. It just went back to the regular day. So it's a really interesting phenomenon to be able to see in the amount of people that came into the city. I mean, you think about a Super Bowl, okay, that's 100,000 people in a stadium. That doesn't equal 400,000 people. So in the city of Dallas alone, it's been very crowded all weekend, but it was certainly a sight to see.
Yeah, it's been a sight to see, too, to see so many Americans, right, throughout, across the country, as it moved across certain parts of the country. It feels like come together for one thing, so it's pretty cool. I should say right now it's over Tupper Lake, which is an area in the Adirondacks. I've been up in there. It's gorgeous, and it looks like we're getting the total eclipse there. Is this your first one? I'm just curious about, for you to be seeing it, what it was like.
I saw a partial eclipse here in 2017, but this was my first to hit totality. I mean, it got pretty dark in 2017, but this was my first one to see totality. Very interesting today because here I am in Dallas, Texas, and it's on its way to Buffalo, New York. That's where I'm from originally, so I've got all kinds of friends and family getting ready for it there, and I can tell them this is what it's like right now. So it's definitely very interesting. I have to tell you, it's been really good for this city and basically any city where it goes through.
Yeah, I mean, that's the interesting. I mean, we have a great story about the impact on New York in particular, which has been hit so hard by the loss of its industrial base. I mean, this has really been a big boon, whether it's hotels, whether it's restaurants, you name it, everybody's been chiming in here.
Absolutely. And to get a flight into here or to get a flight into any of those areas, so expensive, but people are going out, they're eating. It was interesting here. You almost get the feeling of like a tailgate for a football game. People on the street corner with the glasses selling food. We had food trucks all over the place. So you definitely could feel the financial aspect of it. And it was, there's so many times where you're here reporting on difficult financial news or difficult national news. Mm-hmm. This one's just been a nice one to be involved with, to be able to see how many people got out there and really enjoyed it.
The news has been heavy, and this one feels like what we all needed, certainly as a country. Julie, thank you so much. Julie Fine, Bloomberg News Texas Bureau Chief, on the latest of the eclipse. And, of course, my partner in crime here, Tim Stenovec, not in the studio because he went to check out the eclipse. Tim's joining us on Zoom. So tell us about it. There you are.
I got the glasses on. I'm doing this safely. It's pretty cool. I mean, it's definitely cooler out here than it usually is. It's darker out here. It doesn't feel like it's, in the middle of the 3 o'clock hour right now. A lot of people, I don't know if you can see behind me, but a lot of people have gathered. There were more here earlier when they were kind of watching the moon get right in front of the sun. But it feels like one of those moments where, New Yorkers come together to do something in common. And there are, like Julie was saying, these are few and far between right now. And it kind of feels like everyone's on the same page down here, Carol.
I got to say, Tim, you've been so excited leading up to it. You have a young son, and I know you've been excited for him as well, collecting glasses. I mean, as a city, and it feels like anybody along the path, we were just talking with Julie Fine, anyone along the path of this has been all in and, lining up places for people to watch and so on and so forth. I mean, it's really been interesting to watch here.
Yeah, so a lot of attention has been paid to the so-called path of fatality where Julie is and where, so many Americans have gone right now. But it doesn't mean that people who are, hundreds of miles away from that path of fatality can't actually experience something that's pretty darn cool, I got to say. So even if you are, to the northeast of us right now and you could still get a chance to go and check it out, I highly encourage you to, even if you're not in the path of fatality, because, hey, it's a solar eclipse. This stuff doesn't happen, every few months.
All right. Did you actually see, though? It was partial, I'm assuming, or what did you actually see?
Yeah, I actually saw it. So these glasses, I got these from the local library here in New York City. They were giving them out in the days leading up to this. And I actually got to see what it kind of looks like, what the moon would look like when the moon is a crescent moon. The glasses give it like an orange tint. And that's really the best way to describe it. It was actually hard to find a space down here where I could see it. I had to kind of run around with Justin, my trusty cameraman right now, who's holding up the phone. to find a space where we could actually see it between buildings. So that was the issue, is just making sure that you could see it between buildings. After all, it is Manhattan.
To be fair, it's a nice day here in New York City, and I'm looking at you. I'm also looking behind you. You know where we sit. It's an all-glass studio. We have a bunch of glass behind us, and it reminds me of, those winter afternoons, like when it's like 3:30 and you and I are sitting in here and we're like, oh my God, that's what it looks like in here.
Well, that's exactly what it feels like. And scientists have said that this confuses, especially in the path of totality, confuses animals. So dogs and other animals, birds especially, that will experience darkness at a time that they normally would experience in daytime. So it kind of confuses the animal senses. All
right. So what are you going to ask your son when you go home?
I'm going to ask him to make sure to stay inside during this, because you can't trust a 5-year-old to keep glasses on. And we'll watch replays on YouTube. That's what we'll do.
All right. Listen, we're going to give you some time to get back here in the studio, but so glad you could be out there and see it. So really good stuff.
And hey, thank you for holding down the fort. I appreciate that.
Anything for you. You know that. All right. Tim Stenovec, of course, my co-host. He's going to come back in a little bit, but getting a chance to see this. And, we talked with our Julie Fine, who was there, obviously, in Texas and got to see that earlier. But we talked a little bit about New York and New York State in particular. And I'm looking at it right now, watching the NASA live feed, and it's now over Maine, if you will. But we talked about, for a place like upstate New York, it really has had some really tough economic times. And we talked specifically about the loss of its industrial base. The manufacturing sector in New York shrank by more than 60% between the 1940s and 2009. So pretty much cut in half, if you will. That was a report by the state comptroller. But as a result of the eclipse and the totality that you could see up in the Buffalo, New York area, Buffalo being one of the biggest beneficiaries of the eclipse, the state's second biggest city is anticipating as many as 1 million visitors. So we'll wait for some numbers maybe later on today or tomorrow to see whether or not that happened. And that's the same as the entire population of Erie County. So many people coming into the region. The stories leading up to this, whether it's the hotel sites, more than half of U.S. cities along the eclipse's path are fully booked, or were fully booked, for the night of April 7th. That's according to data from AirDNA. It's a data analytics company, with thousands of Airbnbs in the path of totality slated to reach 100% occupancy. That in the Adirondacks and North Country. So there was a lot going on. We know about the traffic stories, but I got to say, just watching this live feed, and we've got it up for you guys who are watching on YouTube and also on our Bloomberg original streaming service, pretty cool to see. And it's still kind of dark a little bit outside.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It drives me crazy.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session, getting ready to wrap up the Monday trade, the eclipse trade, totality.
Yeah, thing moved quickly.
It did, didn't it?
It moved quickly, yeah.
Was it fun?
Yeah, it was cool. But just to see it go from Mazatlan, Mexico during the 2 o'clock hour all the way to Maine right now.
It's pretty quick.
Yeah.
It was amazing.
Some would say it's science.
It's amazing how these things move. Well, did you ever get up? I have gotten up many times to see a sunrise. And it's like dark, and then all of a sudden it breaks, and it's like up, and it's really quick.
What a world we live in.
It's pretty
cool.
Yeah, it's actually Planet Earth. Kind of love you. All right. Also, really, really like our next guest, our Drive to the Close guest. Back with us is Carol Schleif. She's Chief Investment Officer at BMO Family Office, joining us from Chicago, where I believe you did see the eclipse. How are you?
I did. It was great. I flew in last night and realized I was going to see a lot more eclipse here in Chicago than I would have seen in Minneapolis today. So it was fun. And they handed out glasses this morning, so we all got a peek at it.
Was it your first one?
Yeah, it was. It was. We see a lot of northern lights up there, though, so I have that advantage all summer long.
That is actually a really sweet thing. Very, very cool. So speaking about seeing things, what are you seeing when you look at, sorry. It
was a good segue. It was a good segue.
Nice segue.
So what do you see when you look at today's market environment? Not just Monday, but just really, I feel like, Carol, the rethink once again in terms of the narrative around what the Fed might do this year.
Well, I think it's not only that rethink, but I think this week in particular, people don't want to get in front of the CPI, PPI, or bank earnings. It's a very interest rate sensitive week. And so you could see some volatility later in the week. But we were never in the camp expecting 6 to 7 cuts like the market got ahead of itself, we think, late last year. We had, in our annual update, we wrote 2, maybe 3 cuts as our base case. And now thinking that it really doesn't matter realistically for the intermediate and longer term how many cuts we get this year. It's directionally where we're going. And the important thing is the reason we don't see the Fed anxious to start cutting is because the economy is in great shape.
So if we get no rate cuts, who cares? Because the economy is in great shape. Is it that simple?
Yeah, I wouldn't say who cares. You'll probably get some volatility if you get no cuts this year. But if you get a cut or two pushed towards the end of the year, and if you have some visibility on there, and we also have a very big election that comes between here and the end of the year, so there'll be a lot of issue over that. But I think the important thing is this secular trend we've got going on and you've had a lot of guests on in the last couple of weeks in particular talking about how important that secular trend of the infrastructure rebuild that we're doing here, the rebuild, the build out, news this morning with funding for TSMC and news out a couple of weeks ago for funding for Intel. That stuff, 75% of it isn't even out the door yet. So we've got a lot of build, intermediate and longer term, to focus on keeping this economy pretty healthy.
I feel like that was something that was kind of, I agree with you, that people were, some of our guests were coming on, was it late last year or early this year, just reminding us that, all right, everybody, I know you're a little nervous about maybe, this market rally, but that there's still a lot of spend going on in the economy because of some of the federal government programs, especially when it comes to infrastructure. And as you say, they're not all out that door. That money's going to go somewhere, and that goes somewhere, it means it goes into the economy, right?
Well, and I definitely right there. And I think the other thing to watch as we're in earnings season is look at the big tech companies and look at how much they're spending on a quarterly basis for infrastructure build out for data centers.
Yeah.
And we can't even hook all those data centers to the grid. So we've got to get accelerated on that green grid, or not just green grid, but on the transition grid or existing grid. We've got infrastructure here. We've got major gas pipes and electricity pipes that were put in the late 1800s, early 1900s. We've got a lot of serious infrastructure rebuild we need to do. You've got the Key Bridge and then focus on that infrastructure. We had our very own bridge in Minnesota go down a decade and a half ago. And the thing that amazed me is they got it put back up in a year and a half.
Yeah.
And so I think that's one of the things that's really amazing. But you marshal those national and local resources, and that's what's got to happen in a lot of this industrial spend too.
Well, I get that there is the political will to do that for one-off projects and for tragedies like that one and for the most recent one that you talk about, Carol. But I'm wondering if there's, if there is the political will to actually do this on a nationwide basis, because, well, you have a lot of competing factions. It's not like
right.
Lawmakers are necessarily going to fight for other states to get funding.
Yeah, and that it's a very valid point. It's difficult to get things permitted here. It's one of the reasons why we've seen the delay in the buildup, because the CHIPS Act, I think, was passed in 21 or 22. So it's a couple of years out there. So getting the money out the door is difficult, because then you got to get it permitted. You've got to go through environmental review. You've got, and that's one of the things that, Congress has talked about trying to address too, is can we get this stuff permitted more quickly? In certain downtowns where they're trying to permit higher density housing, they're getting pushed back. So there is a lot of that going on, but the will is there. And if we all want to continue to use ChatGPT, we've got to be able to hook that processing power to the grid somehow.
How much do you use ChatGPT? I wonder.
I actually am a late adopter on that. But the interesting thing is I think looking at the number of places that artificial intelligence is already being used. I had a scan done last week, and when I got notice within 12 hours that it had been read, you could tell from the doctor's note initially that they had used artificial intelligence to do that initial screening.
To actually screen the image, or to do the write-up?
To screen the image.
Okay, wow.
And then, yeah. And so a use case is you look at a lot of those routine screens that people have, and to feed them through artificial intelligence where they can say to the radiologist, oh, these are the 15 that look like they might have something going on. Your view needs these 15 first. So use cases all the way through the system in terms of already there, because artificial intelligence, companies have been building use cases for a decade. It's just the generative AI that we're all getting access to now.
Right. It takes it to a whole other level, right? In terms of the information it can use. How is that just 30 seconds? It's just going through that personal experience and seeing that and realizing, wait a minute, okay, this stuff is not just something we continue to talk about, but people are not only made the investment, but they're actually putting it to use. Is it shaping your investment thesis or think? And just got about 30 seconds.
I think it does all the way through, because our research team definitely uses some of the various things, and they're pulling out for us how the companies that they cover are building use cases. And in some cases in the energy industry, for example, one of the companies couldn't lure enough AI engineers through, so they sent their own engineers to MIT for 200 of them to build their own.
Well, Jamie Dimon likens AI's transformational impact to the steam engine and the impact it had on our economy. So everybody's all over it.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.